Hello everyone. Let's have a quick look at the S&P 500 chart. As you can see on this weekly chart, there is a massive advancement from the lows back in the beginning of 2016 towards the highs of this year. Following this huge upward trend, you can clearly see a relatively big retracement. Now, the main question is that if this retracement is the start of a new trend, or just a simple correction. In order to address this question, let's take a closer look at this retracement. So, let's jump into the 4-hour chart in order to have a better look. On this chart, it is possible to count a 5-wave big and fast decline. We can mark this decline as an impulsive wave due to its power and pace. So let's put on the labels. Wave number 1, number 2, number 3, and finally number 5. As you have noticed, in this numbering, the wave 5 is the biggest wave. This can be explained by the fact that wave 5 was caused by fear. Therefore, it has a bigger magnitude than of wave 3. So now that we have labeled the 5 waves down, let's move on to the retracement following it. After the lows of around 2,532, there was a comeback which I will label as wave A of a correction. Following wave A, we have wave B, which if you look closely, never breached the previous low, although it got pretty close to it. After wave B bottomed, we have the wave C advance. So overall, now we have an ABC zigzag correction. And more notably, this correction has stalled at the 61.8% of a Fibonacci level. Let me draw the Fibonacci so you can see. Here you are. So what does this mean? Well, it might indeed be a bad sign for the S&P 500. There is a good possibility that the ABC zigzag correction is pointing to the start of a wave 3. And you probably know what wave 3 means. It is a sign of a more significant decline to come. The 61.8% Fibo level is the most common level for a wave 3 to start. Even if there is no wave 3, I will still expect a relatively big decline to at least penetrate the previous lows of 2,532. So in either case, my favorable positioning is to sell the S&P 500 at the time being. And more compelling is that in this case, we can limit our risk by putting a stop loss on the highs of 2,881. If this level is hidden, then we can come out of our sell trade. Otherwise, I will personally stick to the sell with great power. In between, let me say that one might argue that the big 5-wave decline I mentioned is just a healthy correction and not a sign of a trend change. Well, although any prediction might be true, I will negate this opinion by the fact that corrections are usually slow and choppy, not this fast and powerful. Moreover, the movements seen after this big fall are showing a pattern of correction, which is the zigzag, therefore pointing to further declines. So all in all, I remain a seller at current levels, and this could automatically mean some yen and dollar strengthening might be around the corner. So this is it for this time. Thanks. Bye.